Good evening, all. This is Sunday night. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. This is hard times for most people, not just in the market, but in the economy itself. And it is showing in the market. The problem really is not the news that comes out every day, interest rates, dollar, oil, or anything along those lines. The real problem, what drives the market, is buying and selling. It's people are buying, people are selling, people are looking for something, people are on the sidelines, people are aggressive, people are less aggressive, and so on. And when you look at the market, remember that's what really moves the market, not the news itself. The market always trades on what they think is going to happen 6 months down the road. It's an investment. It's not a reaction to current news. Now, what's going on right now? Basically, our economy is slowing down, and we get bombarded with all kinds of news all the time that tells us that we have to save our money, and we have to carpool, and we have to cut down on our cell phone usage, cut down on our cable bills, and switch to more efficient cars and cheaper cars, and foreclosures, and so on. And people are, to put it in layman terms, everybody's freaking out. Everybody wants to save money. Everybody wants to save their pennies right now because they're afraid of what's going to happen. Now, fear is never good for the market. Market wants certainty. Market wants something to really. They want decisive action. If it's to the downside or if it's to the upside, that's what they want. They want something decisive. What we're seeing right now is an indecisive market. We're seeing the market basically all over the place, looking for a direction, looking for, okay, which way do we go? Is our interest rate drops going to win? Are we going to turn the corner? Are the bond insurers going to get saved, or are we going the other direction where it's basically a total collapse? And that's what we're seeing in the S&P 500 right now. Remember this wedge-shaped consolidation, and then we talked about that, and we had a tremendous downtrend, and we had a lot of fun with the downtrend. And then the market went into consolidation, and then it broke to the downside, and then it broke to the upside, and then it broke to the downside again. That's a confused market. Now, that's the S&P 500, which is probably the most diverse and the largest index that is very much in use right now. I mean, yeah, there are larger ones out there, but this one is the main index. If you look at the Dow Jones Industrial Average, you'll basically see the same thing. Also, down, then back up, then down. There really is no sense of direction right now. If you look at the NDX, on the other hand, and NDX is the top 100 stocks in NASDAQ, you'll see the consolidation is much, much tighter. These are basically the tech stocks, if you will. But on Friday, we had a pretty bad down day, and we chose the downside. Does that mean that we went into a trend right now? No, we're still not in a trend. On a very, very long-term basis, yes, we're in a downtrend, but that's on a very, very long-term basis. But on a shorter-term basis, on the daily charts, we're not in a trend yet. We're just now breaking out of a wedge-shaped consolidation, and a new trend may start. It does not mean that we're in a trend right now. Now, this is what separates traders. This is the true measure of a trader. And we see this in all time frames. And I see this in our day trading chat room, and I see that in between scalpers, trend traders, intraday trend traders, swing traders, long-term swing traders, whatever. There are times to trades, and there are times to sit out. There are times to sit on your hands. You have to vary the size of your bets. You have to vary your aggressiveness. Think about this as driving a car. And we're going into congestion over here, congestion. Then you find the on-ramp to the highway. Highway is pointing south. You get on the highway and you accelerate. It's coming to a stop. You stop. Now you exited off the highway, and when you exited off the highway, you come over here, and there's congestion again. Congestion, and traffic. You cannot step on the accelerator when you're in traffic. Well, you can, but it will cause an accident. It will cause an accident in your trading as well. A lot of people assume that they can just put their cruise control on and just be at the same speed through all market conditions. And that's absolutely impossible. The market just does not behave that way, the same way that the road conditions don't behave that way. You have to absolutely vary your conditions. I called very few calls all of February. We called very few calls, and we also managed our positions in a very different way. We made sure that we take profits at 2%. We made sure that we move our total stop to break even as soon as we take some partial profits. Why? Well, if we're looking for a breakout, if we're looking for a new trend, you want to play, you want to be in the trade. But you don't want to be in the trade in the wrong way. And when you expect to break out, you expect a nice burst of momentum, you expect a very nice move up, but if it doesn't work, you don't want to hold it while the market is reversing. So for example, if the market would have gone up, we want to be up, but if the market started coming back down, we want to be out. We want to be out again. Same thing on the short side. If the market was going to go down, we would want to be in a position, but very, very quickly come out of it if it's wrong, because then you come back into the range, and when you come back into the range, there is no trend. Very different when the market is in a highway, such as over here. You can actually get into a position with a much larger stop because you are actually, for lack of better terms, betting on a nice general move. And that's not what's going on right now. Right now, we are in a very, 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 very tight consolidation. Let me show you the same thing on S&P 500. You also, on S&P 500, you want to be in, but out quickly if it goes back into the range. You want to be in, but out quickly if it comes back into the range. You want to be in and out quickly if it comes back into the range. Is that wasting time? No, because if you take profits at 2%, and then again at 4% on some of our trades, and then again at 8%, and you move your stop to break even, you're actually making not much money at all. 2% is good profit on any stock. I mean, don't get me wrong, but you are paying for the trade. You're playing very, very safe, very, very tight. That's a true measure of a trader, is you want to vary your trading based on market conditions. Now, that's very, very frustrating, and I know that. I mean, a month without great trends in the market is very, very frustrating. But you have to average everything out. If you are a trader that uses daily charts as your mainstay, you have to look at it and say, well, during this period, I made 20% in 1 month. During this period, I didn't make anything. I made 0. So 1 month you made 20%, 1 month you made 0. You made 10% per month. And 10% per month trading is much, much better than a CD in the bank. But you can't expect 20% per month every month. The market does go through its stages, and that's what we're experiencing right now. The market is slow, the market is choppy, but it is looking for a trend. So when is the right time to enter into the market? When is the right time to start looking for trades? Here, after this, when the market is slowing down, or when the market is looking for an on-ramp to the highway? And that's basically what we're doing right now. The market is looking for an on-ramp. Do you want to enter into the market when it's looking for an on-ramp, or when it's looking for a rest stop? Right now we're in a rest stop. Right now we're in traffic. Right now we are in side roads. And that's what we're experiencing right now. Unfortunately, there's nothing we can do to hurry it up. Unfortunately, there's nothing we can do to force the market to come out of consolidation. We have to be patient. Patience is absolutely the most important skill I've found in trading. You have to be patient, you have to look for those perfect entries, you have to look for those perfect exits, and you have to maximize the trades that you're in while they are working. Exercise the money management. Capital preservation is more important than capital appreciation. But when you do get capital appreciation, you want to maximize it. So when we do get this, you want to maximize it. When we do get this, you want to preserve your capital. Guys, that's really, 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 really important. And that's what's going to separate you from everybody else. Excuse me. Now, your goal is to trade and make a very, very comfortable living trading. Have a great week.